Imagine looking at your year-end business report and seeing this massive, beautiful top-line revenue number staring back at you. $1.2 million. If you're a startup founder, a freelancer, or a small business owner, hitting seven figures sounds like the ultimate dream, right? I mean, on paper, it looks like absolute, undeniable entrepreneurial success.
But then you open up your banking app to actually pay yourself, and you see this $0 and 0 cents. It's a gut punch. How in the world can a business generate over $1 million in sales, yet the founder is scraping by, struggling to afford the next batch of inventory, let alone paying themselves a decent salary? Well, it's a terrifying, everyday reality for so many founders, and it's known as being profitable but broke.
Welcome to This Explainer. Today, we are unpacking the profit paradox, why top-line vanity kills startups.
This entire deep dive is actually inspired by the incredibly transformative concepts laid out in Mike Michalowicz's book, Profit First. We're going to break down the core mechanics of his financial methodology today. And we aren't just talking high-level theory here. We're going to look at exactly why most so-called profitable businesses still run completely out of cash, and more importantly, how you can enforce absolute financial discipline starting today.
Okay, so the core of the problem really starts with what we call top-line vanity. It's this super dangerous illusion that growing your revenue is the exact same thing as having a financially healthy business. Let's take a hypothetical founder. We'll call him Alex. Alex runs an e-commerce brand. He hustled, he skilled his ad spend, and he finally hit that magic seven-figure mark. But behind the scenes, Alex is panic selling just to cover his next inventory order. His top line looks absolutely amazing, but it's completely masking a severe underlying cash flow crisis.
And here's the thing. There is a massive disconnect between how we are taught to manage money and how we actually behave as humans. We're all taught to use traditional GAAP accounting, generally accepted accounting principles. Now, that is fantastic for accountants and their spreadsheets, but it is terrible for human behavior. In reality, we use what's called bank balance accounting. Let's be completely honest. Founders aren't checking complex cash flow statements every morning. They open their mobile banking app, they see a big pile of cash in one account, and they think, awesome, I have money to spend. Which brings us to the root of the disease. It's a universally accepted yet deeply flawed traditional accounting formula. Sales minus expenses equals profit. From day one, we are taught to sell as much as humanly possible, pay all of our bills and operating costs, and then whatever happens to be left over, well, that's our profit. But here is the stark, honest reality. There are almost never any leftovers. By putting profit last in the equation, we literally make it an afterthought.
And the reason there are never any leftovers is due to the expense expansion trap, which is basically rooted in Parkinson's law. Think of your business like a goldfish, and your revenue is the bowl. A goldfish is naturally going to grow to the exact size of its enclosure. If you bring in more sales and get a bigger bowl, your expenses will miraculously expand to consume every single available dollar you just made. Suddenly you need a bigger office, more software subscriptions, a massive new payroll. Your business doesn't get more profitable, it just becomes a larger, much hungrier monster.
So how do we fix it? We have to flip the script entirely. The new formula is sales minus profit equals expenses. This right here is the paradigm shift. You take your profit first, immediately after a sale comes in. Whatever is left over after that is what you are actually allowed to spend on your expenses. This isn't just a math trick, it's a behavioral discipline. It actively forces your business to operate on less money, which completely cuts off the oxygen to that cash-eating monster. But before we can go ahead and implement this, we need to diagnose the patient. Enter the instant assessment framework. It's a quick, honestly kind of brutal look in the mirror used to gauge a business's true financial health. It basically compares your actual current numbers against what a healthy, highly profitable business in your specific industry should look like. Now, look what happens when we fill this out for a business like Alex's seven-figure brand. The harsh reality hits instantly. The top-line revenue is over $1.2 million, but the actual take-home profit, a measly $5,000. The assessment reveals that a business of this size should actually have over $120,000 in profit. They are bleeding cash simply because their operating expenses are completely suffocating them. So, how do we practically fix Alex's business? Look, forcing entrepreneurs to suddenly become spreadsheet nerds is a losing battle. It's not going to happen. We have to work with our natural human habit of bank balance accounting. To do that, we need to transition away from having one massive pooled checking account where everything is jumbled together and move into a new system of structured, purpose-driven accounts.
You are going to set up exactly 5 foundational checking accounts. Think of them as physical guardrails for your cash. First, your income account. Next, profit. Then, owner's compensation. Fourth, your tax account. And finally, operating expenses. By splitting your money up into these specific labeled buckets, you instantly know what every single dollar is meant to do just by glancing at your banking app. This setup builds a really vital daily rhythm. I want you to imagine your main income account as a serving tray. Money comes in and lands on the tray, but it never ever stays there. It immediately gets sliced up and served into the other accounts based on fixed target percentages. So for example, 10% goes straight to profit, 15% to tax, 10% to pay yourself as the owner, and only the remaining 65% goes to operating expenses. And here's the kicker. If you can't pay your bills with that 65%, your business is literally screaming at you that you are spending way too much money.
But hey, human nature is weak, right? We all know that if you log in and see a big pile of cash sitting in your profit or tax accounts, you are going to be tempted to borrow it just to pay a supplier. That is exactly why you need the no temptation vault. You actually move your profit and tax accounts to a completely separate secondary bank. No debit cards, no easy online transfers. Out of sight, out of mind. You actively remove the temptation to steal from yourself, or even worse, to steal from the government.
To make this all work, you have to enforce a strict rhythm. You don't allocate money every single day. You do it only on the 10th and 25th of the month. You never, ever pay bills directly from that income serving tray. Crucially, if you are starting this system today, you must immediately go and cut your expenses by 10%. Just trim the fat. And finally, every single quarter, you take half the money sitting in that hidden profit vault and you distribute it to yourself as a reward. Remember, the business must serve you. There's a really powerful saying in this methodology. Well-dressed poverty is still poverty. It is a razor-sharp commentary on modern business culture. Having the trendy downtown office, buying a company Tesla, and boasting to everyone about your massive payroll, it all means absolutely nothing if you are drowning in debt and haven't taken a true profit distribution in years. Vanity metrics will bankrupt you. Cash in the bank is the only reality that matters.
When you actually enforce this discipline, the transformation is honestly incredible. By taking the profit first, you are artificially constraining your operating expenses. It acts as a forcing function. You immediately stop making frivolous purchases, you finally fire those unprofitable clients, and you figure out how to do a lot more with a lot less. Radical efficiency is born out of constrained resources, and that naturally accelerates your true profitability quarter over quarter.
Which brings us to our final, absolutely critical question for you today. Is your business actually serving you? Or are you just working for your expenses? It is time to ditch the cash-eating monster for good. By flipping the formula and taking your profit first, you aren't just changing your accounting rules, you are permanently changing your entire financial paradigm. Put some real guardrails on your human nature today and build a business that actually pays you back. Thanks so much for joining me for this explainer.